ITC is set to post its Q3FY21 numbers, and we are expecting a subdued set of numbers coming in from the company. Nothing special. Though sequentially, obviously, we'll be seeing a recovery coming in for the company, but on a year-on-year basis, there will certainly be some impact on the business of ITC. So let's look at the revenues. We're expecting a marginal growth of around 1% coming in revenues, and we're expecting a 12,205 crore revenue number coming in. Moving on to the profits of the company, we are expecting the profits to decline by 12.4% on a year-on-year basis, and the profits of the company will come in at 3,629 crores. While the margins of the company on the operational front, we are expecting a 280 basis point contraction in terms of the margins of the company. Now, obviously, let's look at the nitty-gritty of the numbers. Cigarette volume is expected to be at -5%. We're not expecting much of a growth. But if you see the recovery coming in over the last couple of quarters, yes, it is surely improving. And anything better than this is obviously going to be a positive sign coming in from ITC. As of now, we're expecting a -5% volume growth. Let's keep an eye out on what actually turns out comes along with that. Now, cigarette volume is obviously going to see a sequential improvement as supply chain issues are not there much, not much of a supply chain issue, as well as the lockdown is also, which was impacting the company's overall growth, is now reducing. So that is also a positive sign for the company. FMCG business, that has surely been doing well. So FMCG revenues are expected to be in mid to high teens, while in terms of the hotel business, obviously occupancy is not going to be back to normalcy. It's not back to pre-COVID levels, but sequentially recovery. But though we'll be seeing an overall impact on a year-on-year basis on the hotel business as well. Now, talking about the margins, the lack of operating leverage is something that will lead to a compression in the EBITDA margins, and that is what that compression is led by the 280 basis point contraction in terms of the operating margins of the company. Obviously, other than that, if you look at the change in the revenue mix as well as the low profitability coming in from the hotel business is something that overall also has impacted the profits of the company this time. So that's why a decline of 12.4% in the profits of the company as well. Now, talking about the factors to watch out for, we'll watch out for the commentary, any commentary coming in on the hotel business. What is the recovery that they are actually shaping up in the hotel business of the company? Cigarette volume growth, obviously important number. That's something that we infer at, but looking at the cigarette rebate as well as the cigarette revenue growth, that is something we'll watch out for. Commentary in terms of the demand as well as any further price hikes will they be taking in cigarettes is something to watch out for. Lastly, the other key factors, the demand outlook for the other FMCG business in ITC is also quite important. So that is all that we'll be watching out for ITC. All in all, not a superb result, but not a bad result, somewhere in between. And we'll keep an eye out on how the performance actually comes out today.